So credit scoring has become the gateway to credit. It's pretty hard to get a mainstream loan without having a credit score. So the lenders are paying a lot more attention to the methodologies behind the development of what a credit score is. Consider a credit score as you would a dollar bill. The face of the dollar bill never changes, but the value behind a dollar bill always changes. The same thing works with a credit score. What's behind a credit score is a concept called probability of default. In other words, what is the probability that a consumer is going to default on a loan? That probability of default changes all the time with how much risk is in the system. And the lenders really look at that probability of default to determine their prospective customers and actual customers' probability of default, and therefore how much money they'll lend to them in their credit program. So the trend there has shifted dramatically to examining probability of default. So as the recession came into the system, that drove more risk into the system, and therefore default rates went up dramatically. In 2009 and 2010, when it peaked in 2010. So lenders raised their cutoff scores to be in concert with probability of default increasing. Well, the reverse happens as risk is driven out of the system, and most lenders have reduced their cutoff scores to get back to providing more credit to consumers. And that's a very important concept to understand. The mortgage sector, however, has been lagging in reducing their cutoff scores, and so there's great opportunity there ahead of us. So education is so important in understanding how a credit score works. And we know there's a high correlation between better knowledge of scoring and a higher credit score. On the other hand, even if somebody doesn't get a good score, that's an opportunity for us to educate. Because if they don't have a score, how do they know how to change their behavior? So we partnered with the Consumer Federation of America, one of the largest consumer advocacy groups in the country, to create an annual credit score survey of consumers and their knowledge of scoring. But we went beyond that, and we put the survey, interpreted it into a quiz, and put it up on a website. It's a website that we don't advertise, we don't capture the email addresses. It's all about education. And the name of the website is creditscorequiz.org. And we would encourage everybody to go take that quiz as a place to start in understanding credit scores and how they work and how they affect your life. Actually, it's fairly simple to keep a score at a prime or near prime level. But to do that, you need to understand how to behave in managing your credit situation and managing your credit. So there's lots of opportunities. We believe heavily in education and that correlation to a higher score. So there's lots of opportunities out there. It's a challenge because you have many languages to do it in and so forth, but we have to start somewhere. And we believe education is paramount, understanding how to manage not just a credit score, but your entire financial life. So in the last few months, say 18 months or so, a number of websites have come up that are free and offer a free credit score for the consumer. But beyond that, they also offer content to say, how can you improve your credit score? And I would encourage people to go on those websites, Credit Karma, for example, Credit.com, Quizzle, and others, that give content to educate consumers on how to improve a credit score correctly and legitimately. They're really good educational sites.